For those of you sticking around, we'll just start chatting for a couple minutes. Let's start with this. How did today go? Good day trading? You know the usual questions that I'm going to ask. Here's the first one. Well, here's the second one. That was the first one. How are you feeling? And is that how you wanted to feel? Those are the. How are you feeling? Is this sort of an assessment? Is that how you wanted to feel? Is your sanity check to make sure the professor's at the computer, right? Not the chimp. Is that money flying? Flying to you? Feel good. Yeah, love it. Good day. I mean, here's a question for you if you're new or newer. Did your posture or your perception of the market aid in your trading? Did it help you get in trades, stay in trades, not get out of trades that went against you and you're like, it went against me, but I have this working for me? I hope that you're starting to use the concept of this underlying assessment of the market that you do on a week-to-week basis. Always evaluating, always, we're looking for weakness. I'm looking for signs that are like, whoa. And when we look at it and we say, hey, fundamentally things look good. We said 1 step forward, 3/4 step back. So overall, still progress. I'm curious. Let me know. We'll go another minute or two and we'll start back up. You want something, right? You want something. It's an interesting thing for me. Glenn can probably attest to this. When I talk to people and I get to know them and I'm coaching them individually, I'll be like, yeah, tell me about your trading. And they'll go back and they'll be like, oh, I started and things weren't very good. And then all of a sudden it picked up and then now it's, or they'll say, oh, it's doing great. And then all of a sudden things fell apart. And as they say it, I could be looking at a chart of the S&P 500 and I'll be like, oh, so did you start trading around middle of April? They'll be like, oh my gosh, that's exactly when. Well, because what they're describing is not indicative of or demonstrative of their abilities as a trader. What they're telling me is what were market conditions at the time. If someone does really well when they first start out in trading, it's not because they have like a uncanny knack of reading the market, because the market's probably pretty good right then. They start and it goes well. Ironically, a few of the books that I'm a fan of are I'm going to just start the recording, even though we're just chit-chatting. I usually like to wait, but then we start getting into good stuff. I'm going to try to. Boom. Is it recording? Yes, we're recording. Market Wizards, New Market Wizards, Stock Market Wizards. These are books that are just, short narratives about some of the most successful traders over the last 50 years. And it's interesting because it's not like you're going to read and they're going to be like, my secret is to take the 7.3 stochastics and turn it into a 7 2.5. And if you do that, blah, 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 that's not a path to success. That's nothing. You'll actually find that some of them trade futures, some trade stocks, some trade options, some trade commodities. You'll find some are fundamental, some are technical. You'll find some are trend traders, some are swing traders, some are scalpers. So it's like, well, there's all these different ways to do things. Then what do we look for? What's the common ground? Psychology, risk management, consistency, rules, organization, right? These things where they talk about, right? And they talk about what happened. A lot of them have a very similar situation where they first start trading, things go really well. Oh, they're doing great. And then all of a sudden they go spectacularly wrong. They blow up savagely. Then what? Then they actually learn something. And that's what they all say, right? Like, and then I learned about risk management. And then I really learned about psychology. And another similar thread was this. If I could do it all over, I would reverse the order and the process. And I would look to focus on my psychology first. Get my mind right for what is it I'm against and how am I going to make sure that the professor's at the computer and the chimp is in the cage. Then the second thing would be a extraordinarily strong risk management plan. Account risk, or what we call portfolio heat, trade risk, number of trades, trade adjustments, right? All these things that we have in our trading plan where we're trying to say, hey, look, let's control risk. If we can control risk, we can control emotion. It's not eliminate emotion. That's the fallacy that a lot of people succumb to. They say, oh, if you want to be successful in trading, you've got to take emotion out of it. Like you're a robot? What if they said, hey, if you want to be really successful at parenting, you've got to take emotion out of it, right? I mean, you'd start laughing. Like, what are you talking about? Of course there's going to be emotion. That's silly. It's silly to think that there wouldn't be, right? Like, we're saying, of course there's going to be emotion. It's about recognizing. It's about awareness and control. Not about pretending like you swept it under the rug and it's not there. That's a recipe for disaster. So we're now officially going. I see a few more people coming in. I see a few new names. Scampy, I think I said hello to you, but welcome. Ellen, are you new or are you showing up again from recently? I'm not sure. But anyway, good evening, everybody. Officially, welcome to the Market Watch Group Trading Foundation working sessions. I'm taking the second half. This is where we have just a little bit more free flow. I constrain Glenn a little bit and say, listen, this first session is really a safe place. If you're new, you can ask any question. We're not going to dive into complex Greeks. Right? I mean, maybe if you ask for it, he'll dive in a little bit. But fundamentally, that first 45 on Tuesdays and Thursdays, that's for the beginners. Everyone else is welcome to come and listen and participate. But like I said, that's the safe place where you can be like, hey, how do I do this? How do I find this? How do I set this up? I'm not sure what I'm doing here. Great. Let's talk about it. Fact is, if you're asking, even if they're not like they don't have a some level of understanding, they're probably not as confident as they would like. So that question's not going to help you. It's going to help everybody. Anyways, now we get to a little bit more freedom to explore whatever comes our way. We'll do some options. We'll do some advanced things. My name is Scott. If we haven't met, make sure you say hello to me. PJ, been out for a couple of weeks, maybe a little bit more. Made money on Amazon, stuff that. Okay. Nice update. I appreciate that. Yeah, things are okay. Disclaimers, as always. We're not brokers. We're not advisors. We don't give advice or recommendation. This is for educational, illustrative purposes only. What are we going to do? Let's just go talk about it. Let's talk about it. I know you covered a lot of this with Glenn. My recap, I'm in the 25 zone. I think a few people started to mention this 25 basis points for next week's cut. I think a few people started to mention that 50, where everyone's like, oh, maybe we'll get 50. 50's desperate, right? I don't think we're at a place of desperation. I don't think it's like, oh, we better hurry and hit it with 50. We're not there. That's not happening. I think if it did happen, it wouldn't be great. I think it would actually signal the market that there's a little bit of unspoken weakness, maybe, that they're trying to address. So yeah, I I actually think people don't even realize what they're doing when they're just like, let's just lower it 3/4. You're like, come on. Like, that's like when you used to ask for fruit punch in the water fountain in elementary school. Like, you don't really want that. Okay. Yeah, let's talk about what's coming up. So we have all of our CPI and our PPI year over year came down lower than expected, a little higher on the core, but overall it's coming down at a good tick. The fact that it's coming again, the Fed's concern in the summer was that inflation number stalled. There was a stall for 3 months, 4 months. And when it stalled, they're just like, yeah, we're not gonna go early. They didn't need to go early. What we talked about all summer long was the fact that, oh, look at this. Miguel, I updated. I updated. You can see what is going on, Market Watch. You're better than this. I think there's I just saw a little tag. I think I maybe picked up some kind of malware or something. I better look into that. I think that's what it is. All right, let's get to the charts. Let's get to the charts. A lot of stuff. So tell me about new trades. I saw a few things that I felt were viable. Whether there were things you were already in, things you were thinking about. We put out an alert today. This was one that we started watching and then materialized. Same kind of a pattern we had back here. Spiked up, pulled back, turned. Spiked up, pulled back, turned. What else do I still like? Possibly for tomorrow. Anybody looking at Apple? NVIDIA and Microsoft yesterday, those made sense. Let's go through the list, actually. Let's just go through the list. If we don't have anything specific, let's talk about the list. Apple's close. It's kind of turned and it's just sitting for you if you want it. If it starts to go fast, you'll be like, oh, I missed it. So it's like either you're taking it. One of the things that might help right now is like a little bit of a signal like this where you're like, hey, look, it's green, white, green versus red. The next candle I would expect, these are still what I would call transition candles. If Heikin Ashi candles are new to you, and look, the last thing I want is a quiet working session. We're all working. Not just me, we're all working. Heikin Ashi. How comfortable are you with these candles and what they do? They're very interesting candles. You can see they're very smooth. That's their job, is to be smooth. Right? I see two core types of candles in regards to Heikin Ashi. I have momentum candles that are these here. All of these, I'd say to here. What are they? They're bigger body, no lower shadow, which means it's these flat bottoms, right? There's flat bottom, flat bottom, flat bottom, flat. Why is that helpful? Because guess what I can do? I can move my stop just a little below. When it catches these momentum candles, that's what you tend to get. These big chunks of price action. Boom to boom. Right? Now, those are momentum candles. What else do I have? Transition candles. So you can see these. When the bodies get smaller, when I have shadows on both sides, that's when it's transitioning. From what to what? Well, in this case, the momentum was down. Down, right? So if it's transitioning, then it's transitioning from down momentum to, well, what we would hope is up momentum, right? So very helpful to identify momentum. Miguel called it out perfectly. Great momentum reading. That's what they're for. They don't gap. So if something gaps, it's not going to see it. For example, this is likely a gap right here on this earnings. So if I go switch back now to candles, boop, you can see I pointed right at this gap. It doesn't show it. Why? Well, let's talk about these as construction real quickly, because if you're thinking, Scott, it was very interesting. Funny story. It's probably 15 years ago now. Maybe not that long. 2013, 14. Okay, so maybe 10, 11, 12 years. And I was working with a student, and she goes, Scott, I'd like you to teach me about Heikin Ashi candles. I said, oh, yeah, okay. I said, give me a week to read up on them a little bit, find out what they are, and I'll teach you about them next week. And I think maybe it wasn't as funny to her as it was to me. But I'm like, look, there's like 1,000 indicators that I don't use, right? There's 1,000 indicators Glenn doesn't use. And people will sometimes be like, why don't you use that? Like, what do you mean? Why don't I use something? I use what I use because I know why I use what I use. But I'm not going to have a reason for why. It's like, why don't you use the word expatriation? You're like, I guess I've never had a reason to. I don't know. Why don't you use the awesome oscillator? It could be a great indicator for all I know. I don't need it. It's not necessary, I guess. Every year they come up with more indicators. All the time. You're probably even seeing that. That's the flavor of the week in the realm of what people sell. They'll sell automated systems. Now they'll sell indicators. Everyone's coming up with their own indicator. It's going to be the best thing you've ever seen. Okay. That indicator, if it's a trending indicator, will work great in a trending market. It'll be chopped up in a sideways market. And avoid paralysis by analysis. Absolutely, Cap. Right? Absolutely. It's a little bit of that discussion that we veered into last week when maybe it was last time, we were talking about the great Daniel Kahneman, Nobel Prize winner, who conducted the study on behavioral finance with his friend Amos Tversky, who wrote a book called Thinking Fast and Slow. And thinking slow, like people think, oh, if I have all the information, if I put 17 indicators on my chart, I'll have all the information and I'll make a better decision. You won't. You won't make a decision. For exactly what Cap said, because you're paralyzed by the fact that you have too much. It's never going to, right? It's just like, we don't need that. We need to, get the market right. If it's bullish, be bullish. If you get the market right, you've got 70% of the battle done. Get the sectors right. Where's the money going? Know where the institutions are moving money. They're slow. They take months. They give us plenty of opportunity while they're moving in. Right? Those are the logistics of what we're doing. And make sure, right? And then it's just a matter of have your rules, have your watch lists, manage your risk, and we go forward. So, Heikin Ashi, how are they constructed? It uses the concept of averaging. It averages. So if I zoom in on this here, the open of the next candle is going to be drawn at the average of the body, which is exactly the middle of the body. So if you look at this body here of this one is drawn right at the middle of this one. Boom, boom. If I take the middle of this red body, it's going to put me where? Right at the start of this one. middle of this one, right? You see how that works? If you start at again, red means you're starting at the top, white means you're starting at the bottom. But if I start here and go straight to the left, I'm going to be right at the middle of this one. Start here, go to the left, right at the middle, start here, go to the left, right at the middle. That's how the open is drawn. So I know that this is going to be drawn here, right at the middle. That price right now is 221. We're already here at 222.70. So if we're here or even a little higher, when this candle opens, it's going to look something like this. Which is what? Momentum. So if I decide I'm going to enter Apple, do I have to put my stop loss down here below this? Absolutely not. I would put mine here, knowing that when I hit that momentum, I'm likely to move it up to here for the next day. And then I can just move into a trail position. Boom. Every time it keeps going higher, and if I get a big day, it moves a little higher, and I can just move my stop, move my stop, move my stop. That is a swing trade methodology where you're constantly, right? You're just moving your stop. Move it, move it, move it, move it, move it. Until what? Bam, you're out. Now, are you going to be like, oh my gosh, a week later, it went a little higher before it fell apart? Nah. We don't care about this. We got everything we wanted here. That's it. We're not trying to call tops and bottoms. Right? That's not shouldn't be your objective. I don't think it is. Let me know if it is so we can maybe adjust those expectations. We just need to meet in the middle. Catch that meet in the middle. Right? Boom, boom, boom. How many days is this? 1, 2, 3, 4, 5, 6, 7, 8, 9. When we do alerts, what do we typically put? 7 to 10 days on our swing trades typically. NDAQ, if you look at the alert, I went a little longer. Why? Let's jump to that for a second. Is this making sense? Is it resonating? Do you like it? Let me know. Let's move on to what? Let's just set it. What was it? NDAQ. Whew. NDAQ. Now here you can see that there was no transition candle. Last time we had a big red, then we had this transition, and then we went into the first momentum candle. And on that first momentum candle, you can see you went quite a while. Now, I want you to notice this. It would have caught you if you got too tight. So you have to be careful how much. I don't want to. Now, there's not much I can do about that, but I would rather see if I can't catch more of it if I can. So knowing that, seeing that there's a day like this, I might be a little more careful. But here you'll notice that this is more like 16 days, right? 12 to 16 days, a little bit longer, just in case we need it. That's all we're doing is just kind of using previous stuff to help us. Let's leave it on these Heikin Ashis for a second so you can kind of see Apple looks viable. Aflac, you might think, oh, it's red. It's not. But here's the thing about these Heikin Ashis. One of my objectives is, can I catch the last red or the first green? That's kind of what, like, think about that. Last red, first green. Last red, first green. I'm going to go here. Last red, first green, right? Last red, first green. What does that tend to correspond with? Now, arguably, I'd actually put this on as well. And that actually would have actually done okay. Probably would have broke even, maybe even made a little bit. So I don't want to skip that. Does this count? Yes. Does this count? Yes. What's the pattern? When it crosses, when it's turning, boom, 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 there's some confirmation there. What do we have going on? Looks like it's starting to turn, and it looks like I might have my last red. Why do I think the last red? Because you'll notice this big red here is turning into this little red here. And little reds tend to turn into either dojis or greens. Yeah? Do we see that pattern? So now what do I think about Aflac? I think I've got a great looking setup that hasn't quite triggered. Hasn't quite triggered yet, but it's damn close. Yes? Are you picking up what I'm putting down? That's the question. I need to know. I need to know if this is resonating. Because I feel like the hard part is in our minds. The easy part should be on the chart. Right? I really shouldn't be like, here's what happens. We overcomplicate trading so often. Why? Because it feels hard because so many people fail. So many people fail, it's hard. If it's hard, we therefore need a hard solution. It's complex. We need a complex solution. It's not true. We need a simple solution. Simple and repeatable. We need to make sure that the professor can execute at the keyboard while simultaneously holding off the chimp sometimes. He's got to do both. That's how simple it needs to be. Hopefully we keep the chimp in the cage. Yes, Dan? Yes. Keep it simple, stupid. It's a great step. I'm going to give you just a quick rundown of Heikin Ashi. It's easy to start there sometimes when you shouldn't. I want you to always start with price action. So here's what's interesting. The concept of support and resistance is a price action concept, right? You're finding a price level. Standard candlesticks are open, high, low, close. That's price action. Indicators are calculated things. Stochastics is an indicator. You calculate it. MACD, moving averages. Heikin Ashi is an indicator. It's calculated. I told you it uses the concept of averaging. It's calculated, so it's an indicator. So it has to come after. The prioritization is price action first, indicators come next. I love how you put that. A confirmation step. Beautiful. Magnifique. I'm starting here just because of the perspective, right? So you're like, well, why are you starting here, Scott? Because of the perspective. So you can see what does Aflac look like as close versus Apple, which is already turning, versus Amazon. Amazon's on its third. It's way up here. Its next candle starts here, right? And so if you're still in Amazon, you're thinking up in this area. AXP, that's your first candle. But this one, you can see I had this, look at the size of this doji. That's a scary looking doji on a Heikin Ashi. That is not a scary looking doji. That is. Then I got a nice stable coming out of it. And today we're not as, it's there, but it's a little harder. So you can just kind of see how it reflects. This is close, but hasn't given a signal yet. This gave a signal today. Does that mean I'm too late? Not if I can catch it in this vicinity here, right? Anywhere between 69, which is around this level, and here, I would say I could still catch this. BLDR. So this one, you might think, oh man, Scott, that looks perfect. We were talking about this one, and now look at it. No, this is why I don't want to start here. I want to start here so I can be like, oh gosh, it like kind of gave a signal and then it gave a weird little hick and then boom. And now I'm thinking, I just don't think I'm going to be able to build this with the right reward to risk perspective. It's okay, right? I don't need to trade BLDR. I might be able to trade. I definitely can't trade carrier, right? Carrier signaling back here. So this is what I want you to be thinking about is our windows in trading. They're not always right on top of each other. This window opened 3 days ago. Caterpillar just getting going for an industrial. What else is maybe setting up? How about our defensives? I mean, look, a trend is a trend. Higher high, higher low. If this thing starts to turn around, right? 1 day away, one more day positive, and what happens? This thing turns and crosses. Big lesson, don't chase, right? We don't chase. We don't show up to parties late. Right? That's when the cops show up. The cops show up late, not us. Yeah, I think this is close. What does this look like on a Heikin Ashi? I feel like this is a good day, like to just like hammer some concepts that I think will be helpful. Look, what do I see here? I have a big red and now we have a smaller red. Maybe I'll get a doji here. Maybe this comes next. Can I trade in on a doji on the Heikin Ashi if this is crossing and price has turned higher legitimately 100%? That's exactly what I would expect, actually. So, yeah, we've got signals still. Everything still looks good. I feel great. Let's go back. Yeah, I expect another trading signal probably tomorrow as I think about it. Here's Costco. That's one we've said we've liked. Anybody pick up that one? Back in this area. Fast, you still in, Miguel? Patience paid off? Yes. I hope so. Yeah. GOD. Oh, look at gold breaking out today. What's up with gold up 2%? Is anyone trading precious metals? That was a big one for GM too. You're like, woo, 3.25%. The hard thing about this is if I took this at 46, I'm thinking, is my stop down here? Something like this, I might actually be more inclined to wait for tomorrow as a confirmation. And if I wanted to aggressively, I could get in, and rather than putting a stop way down here that's a mile away, I'd get in and put my stop right underneath what would be the body of the doji and the bottom of the new Heikin Ashi candle, right? Where the same kind of a thing as if I would have put a stop here, getting in on this day. Yeah, you would have been just fine. Or putting in a stop here on this day, same thing. Never would have been jeopardized. Here's another representation. Instead of putting it all the way down here, or all the way down here, or all the way down here, I'm putting it closer. What does that do for me? That gives me a better reward to risk ratio. Instead of getting only 3 contracts, you might end up with 5 contracts, which, if it's a stronger market, I want that. What have I said? I want chips on the table. As my market posture improves, I want chips on the table. Okay. Let's keep going. I hope this makes sense. Google looked pretty good today, but for me, I've already said it's got to break that. So we're right where it needs to be. I need it a little higher. Then when it pulls back, then I'm looking for the higher low. And then I'd say, all right, okay. Right? I promise you that if you go back, maybe it's this. This might be the first higher low here. It kind of just went on a run. Still, all of this started where? Back here. Maybe even back here. You know what? Let's go look. Now I'm curious. Now I'm curious. Let's go back a little bit further. Nope. See, I was right. Sometimes this little pattern of ours, it broke out, and then it's just like, kept going. And then finally, that's the first real higher low opportunity. Scamby said, crazy, this makes sense. I know, right? It's like when you're skiing and all of a sudden you're good enough to go fast, but then you're not quite sure if you know how to stop yourself. So you're like, wait, I think I'm actually more dangerous. So yeah, be careful. But again, going back to this, you don't even know how to put the trade in, but you can read a chart, but you can recognize. Here's what we're talking about. It's supply and demand. We don't think we're some great market geniuses here. That's for sure. That's for damn sure. Maybe we have a few in here. Certainly not me. What we think is we're humble enough to just simply say, look, I just want to find a simple system where I can recognize buyers and sellers, supply and demand. Did the buyers do enough to break out? Yep, they got it all the way up to here. Now what? Now wait for the sellers. They didn't do much. Great. Gave us a little piece, pulled back. The fact is, all of this was actually really iffy because it's around earnings. That's a nice move. There's something. So during this period of time, if we could pick up 3 trades on Google, if we could pick up a couple more on Meta, if we could get, right, then that window from April to July would have been a very profitable window for you. That's all we need. And then during this period of time, when things got a little bit crazy, we didn't get hurt, or at least not too bad because we dialed back. And now as things start to get going again, we're saying to ourselves, push, pull back, right? Expand, contract. Miguel, you're 100% right. That's a quote. Everybody's a genius in a bull market. So then what? So then what we need to do is make sure we're really good at saying, hey, the problem is that we tend to recognize that after the fact. And we're like, oh, look, we did pretty good then because the market was good then. But did you recognize it enough to go from 8% risk to 15% risk, hit it hard for 2 months, and then dial back quickly when the market started to choke? That's being a genius. That's when you're like, I made way more money that way than if you're like timidly trading this bull market, and then all of a sudden you get bullish right as it gets consolidative. You're like, oh, I'm doing so great. And then the market tanks and you've got more trades on, and then you get, whoo, we've seen that story before. Yeah, so conditions matter for sure. Yeah, so I don't know. I'm going to be patient with Google. There's other things. We have plenty. Let's go back to 6 months. Goldman. I kind of feel like these big guys, they need to pay penance. They're excommunicado for the time being. Gotta make amends. Home Depot. It was there if you wanted it. I did not. I was a little hesitant. Did anybody pull the trigger on that signal? We talked about it. I just said I was a little iffy on Home Depot. I've got to stop iffing myself out of some good trades sometimes. I'm like, just pull the trigger. If you like it, pull the trigger. I think the weirdness of the election and the Fed is just kind of like things feel September. It's September, you know. ICE. We liked ICE and NDAQ. NDAQ seems to be firing a little better, but they're both giving very similar signals. So 6 of one, half a dozen of the other. There's small caps. We're going to keep watching the small cap, large cap dynamic. Here's JP Morgan, non grata. We got to wait. KBH. Yeah, I kind of feel like this was the consolidation and it's breaking out of it. But by the time it does and pulls back, I've got earnings. So we'll probably, you know what? I'm probably going to bounce this actually. I haven't traded it. Anytime something sits on my watch list for a while and I don't trade it, it's like There's something about it that I'm maybe just not going to. Oh, good. We've still got it. I like CL a little better. What do you guys think? There's Colgate Palmolive. There's Coca-Cola. There's 3M. 3M is, if you liked 3M, it already is a go. So if you're like, I like 3M better, then I'd be like, oh, so you're already in it? Because if you're not, you don't like 3M better. 3M was better here when it crossed and gave this white candle. That would have been right? That's one where you don't want to get stopped out on yesterday's little hiccup, and then it's going again. So I don't know. I'm leaning towards CL, maybe Coke in second position. Morgan Stanley, that's one that's got to do more. Microsoft. So I said did I say that was consolidative? I think I did because I didn't trade it. I was thinking about it, but I was like, you know what? I'm going to wait. It's done enough. You can see it's taken this out. At this point, all this needs to do is get up, pull back, higher low, and I'm ready for a new trend to start. Here's the good news. Apple looking good. Google looking good. Meta looking good. Microsoft looking good. Oh, we're seeing a pattern of what? Leaders from tech and tech adjacent communication services. Micron, not as much. But that's one that we really, in fact, I'm probably going to bounce this one. I like NVIDIA. I like Taiwan. I'd put AMD on before this one. Here's NDAQ. That's one that we obviously liked. Here's Netflix. I'd say that's viable. NVIDIA. It was here if you were going to take it. We talked about that. It's there if you wanted it. And then it's gone. Anyone trade NVIDIA? Miguel, you said Microsoft and... Was it NVIDIA? Yes. PGR Insurance out of financials is still bullish and close, but not yet. PLTR. So you probably took half, or maybe you didn't. Maybe you just wrote it. I took half, but it was probably closer to there. Now it's just sitting. It's almost Friday. It's starting to turn over. Yeah. If you think, hey, I'm flying to New York, but then I start running out of gas here in Chicago, I'm going to land the plane in Chicago. I'm not going to keep flying. So just be careful of what you're going to do as you see buying pressure waning. We'll see. The Qs showing that tech bullishness that we talked about. RKT, nope. RTX, maybe, but I still like. Well, actually, for a industrial, this might be worth looking at. We'll keep an eye on that one. There's the SPY. There's TSM. Looks fairly bullish. UMP trying to make a comeback if you happen to catch in this one and stay in. I think that there's still recovery coming. USB, ugh, ugly. UUP staying down. What did the VIX do? VIX is coming down. What about Tesla? Oh, fine. I'll look at Tesla scamming. Tesla is one of the Magnificent Seven that I'm willing to not look at. Yeah, I would say it has added. Fine, I'll add it. If you guys want me to add it, I'll add it. It broke that consolidation. It made a higher low and it turned. So that was a viable trade. The problem is it went up and then it just got smashed and then it started coming up again. So if you're in it, man, you stuck through it. But I would say right now, I would need it to get, let me back a couple of lines out. I would need it to get back above here on the current move. Then I would need it to come back down here. That would be the only thing that would make this viable. I am inclined to agree with Michael, who said too choppy. I'm in agreement. There. Are you guys happy, you Tesla fans? Okay, where were we? The VIX. Okay, we're not out of the woods yet. We're in a pretty good place. This is, let me zoom in one click. I'll go look at GE. GE just is a little bit too conglomerate. Is that a word? Is that an adjective? Conglomerate-y? But yeah, we'll go look at it. It actually, we actually watched GE Aerospace for a little while after the split, right? Because all the different breakups. So I guess it's a matter of which GE now, right? That was our prior basing pattern where we had a breakout. Yeah, GE Aerospace was the best one. If it doesn't get all the way back down to this blue line, let's say it goes here and then turns, that's a higher low, and that is a concern of escalation, and I will hedge that. And we'll need to hedge that because I'll probably have bullish trades on, as you probably will as well. That's where the hedge is most important. But for now, looks okay. If we get another bullish day, you never know when you're going to get a bullish day where it just comes all the way down. And if we get all the way back down to that level, then the hedge is reset. If we get back down below 15, there is no hedge. And then if it goes up and makes a higher low, that's actually quite a bullish signal, and I would trade that more aggressively into our next move. There's the VIX. Okay, I'm at time, so let me go look at GE Aerospace. GE Aerospace kept GE, right? Yeah, see, look, we had it back here, and I'm like, okay. And then it just sort of fell sideways. I mean, it just really can't seem to. It's the little engine that couldn't, This is not really going anywhere. But if it shows up in a search, well, then by all means, we will add it. And I will add Tesla right now. I don't want the group to get upset with me. Okay. Did we cover everything? Any questions, comments, or concerns? Remember that tomorrow morning, Glenn will be on for the first 45 minutes of the market from 9:15. From 15 before until halfway into the market. So for that 45 minutes, he'll be on in the meetup to chat, hang out, talk about it. And then I will be on for the last 45. We're going to extend that soon. We're going to make that the full last hour soon and give us a little more time to process and